What's going on, traders? This is the first video in a new series we're going to be doing called Shark Bites. In these videos, I'll be sharing a little bit of trading knowledge that I have learned over the years and hope to share it with you, and that it is beneficial to you guys on your journey through the markets and with your trading. So today I wanted to talk about creating a playbook. Now, a trading playbook is an important aspect that every trader should be aiming to develop during their journey. I really believe that trading should be treated like a business, and your playbook is your business plan. You need a methodology that plays to your strengths and negates your weaknesses. Professionals aim to be intentional and targeted with the application and execution of their setups. And really the foundation of your playbook is based on metrics, based on data. I'm a big proponent of journaling your trades. I would highly recommend TraderSync, checking them out. You can easily export your trading data from your broker and upload it into their program, and it is a great way and an easy way to track, make notes, and see your performance on each of your trades. So I highly would recommend them. Check them out, TraderSync. But what you really want to be doing is going through your trading data and analytics and looking at the results. Now, I would really suggest tracking at least 50 setups. So if you trade 50 flags in a row, well, not in a row, but 50 flag setups, and have them all categorized, and then go back and looking at those metrics. So you'll see then over a sample size of 50 how well you actually perform trading that setup. We're not here to just go on our gut feelings, just guess at how well we trade a certain setup, and it doesn't really matter what the setup is. It could be a flag, it could be an ascending triangle, it could be taking a long as price is coming into some liquidity at order block, some some demand. It could be fair value gap, it could be a BRB off a trend line, whatever the case might be. Again, marking off and having those setups marked in your journal, what they were, what the market conditions were at the time. Then you'll be able to really build on your data and start to create a business plan for your trading. So, one of the other things that I wanted to mention that I would caution you from, a lot of traders are trying to learn 50 setups, 25 different setups, trying to capture every little wiggle in the market, every little move, and I don't really believe in that. Good trading, the best trading is boring. We're waiting for the trades to come to us to fulfill our criteria that we have already predefined, preset criteria, and then we take the trade. Remember, the market is easy. It's neutral. The market only has three modes. It goes sideways, or it goes up, or it goes down. We're the complex ones that bring all our emotional baggage and stuff into it. So, we're not here to be making things overcomplicated. And what I would really suggest for new traders or even intermediate traders is focusing on 3, 4, maybe 5 setups at the top, at the max. I think it was Bruce Lee. He said, he does not fear the fighter who knows 500 kicks. He fears the fighter who's practiced one kick 500 times. And I think that that's very applicable to our trading, focusing on 2, 3, 4 as you progress, 5 setups, and that's it. Those setups are, again, based not on feelings, not what you think you trade well, but going back and looking over your data and analytics and saying, oh, okay, well, I thought I really traded bull flags well, but it turns out that I have a 30% success rate on them, and my risk to reward is usually, 1-to-1 or something not that good, and maybe I don't trade them as well as I thought. And then you go back and you look at how you trade supply and demand, and you see that, oh, well, when I'm trading long into demand, wow, I have a 65% hit rate, and my risk to reward is often 3 to 1 or 4 to 1. Okay, well, now we're cooking with something where we have analytics and we have surefire data that is confirming what steps we want to take in our trading. Just like, in a business, like I said with that analogy, if you're doing a certain type of marketing but you're not getting any return on your investment, you're going to have to re-examine your marketing plan and say, okay, well, I'm not hitting, these sectors of customers that I want to be, potentially bringing them in as new clients and stuff like that. So, for me, I like to grade my setups on A, B, C, D. For my A+ setups, the ones that I know from backed up from empirical data that those are my best setups, well, those are the ones I'm going to be putting on the most size. And I go down, that would be my max risk. My B+ would be my normal risk. And my C trades, small risk, maybe I'll still take them, but keep it a little bit smaller, so that way I have less exposure on setups that I know I have a lower statistical edge on. So now one other thing I wanted to go over and kind of stress here, that everybody's playbook is unique. It's your own playbook. My A+ setup might not be your A+ setup. So just because you find someone that loves trading this type of way, that might not be the best for you. You have to see what goes in with your stats, your personality, and your analytics. Some people are scalpers, some people are swing traders, some people are intraday trend traders. There's 1,000 ways to skin a cat, but you have to know what fits best with your personality. And as far as the playbook is concerned, how do you trade? What are your best trades based on your journaling and what that's telling you? So, what we're after at the end of the day is an edge, and what is the edge? It's a higher probability chance that we're going to get one outcome over another. And if we don't have that edge, then we don't have a trade. And that edge, again, is based on your data and your metrics. Your playbook, that's your business model. Your setups are tested. They have defined parameters. And as you treat your trading like a business, you're one step closer to thinking like a professional and finding success in the markets. So I hope this helps, guys. Let me know in the comments if you enjoyed the video. If you have any questions further, I would love to reply and answer. If you're liking the video, give a thumbs up, subscribe. Otherwise, I hope everybody has a great rest of their day, and I look forward to putting out more videos like this for you. All right, guys, have a good one. Take care.